going on in Canada, and I'm sure it's coming to other Western cultures. This is a manifestation of how we're morphing into this "you will own nothing and be happy" kind of environment, right? That Klaus Schwab and the World Economic Forum told us we would be getting into as we move closer to 3030. Can you believe this? Lenders now seeing 60, 70, even 90-year mortgages as Canadians struggle with rocketing interest rates. Now, they got a specific kind of mortgage up there that we're going to talk about in a minute. Just like we've seen with car payments being pushed out to 6 years because things are becoming so expensive thanks to inflation. So who makes out? You don't, because if you got to make a car payment for 6 years, when do you get to that point where you're saying, okay, well, the car's paid for. I'm going to own it for, another 4 or 5 years, and I'm going to take all those payments and I'm going to invest it. Okay, now I'm going to buy some assets. Okay, can you do that if you've got a 6-year payment and they're following a technique called built-in obsolescence, where things fail on you and maintenance issues start to, really pile up? Think about this. The Voyager 1 and 2 spacecraft, they were launched in the early 1970s. They are still operational, and they have left the solar system. And there's a lot of argument on that, guys. I got a minor in astronomy. I'm not going to go deep within this, but they've left that part of the solar system that is defined by the orbits of the planets. Okay. They're still working. However, I bet you within 12 months, I'll have to use a cell phone because this thing will start to go on the fritz. It's called built-in obsolescence. So that's the example of the car. Okay. You're never going to be done with spending money on a car. Now we've got mortgages that basically look like renting in perpetuity, which, by the way, you think about this. Think about the people who, in a traditional 30-year mortgage say, okay, we're going to get the house. We got married. We're going to get the house. Okay, by the time the careers are over and we're retired and paid for, then we won't have that big expense hanging over our head and we can go comfortably into retirement. How in the world can you do that with a 60, 70, or 90-year mortgage? You're not even going to be alive unless you have some crazy DNA. You're not even going to be alive by the time a 90-year mortgage is paid off. If you buy the house at 30, come on, or even 20. So this is, again, a manifestation of how the banking industry is saying we're still going to make money. Now, you may never own that car. You may never own that house, but we are going to still get paid. So let me go over a little bit of this with you. Some banks mostly offer fixed payment variable mortgages. Now, that is fixed. Remember that term, fixed payment variable mortgage, because it's not something that I've seen here in the US, but this is the thing that is really interesting. And I think we're probably going to see it in the US and other parts of the world. Okay. So these fixed payment variable mortgages allow homeowners to keep monthly payments the same, but leaves them vulnerable to paying little off the principal. So let's say, just make it easy, you got a $1,000 per month mortgage. And when you start out, okay, let's say $800 of that in the first few years is interest, okay, based on the interest rate that you got the mortgage at. But then interest rates rise. So now instead of $800, now it's $900. It fluctuates the whole while through. And as what's supposed to happen, what you see happen, is as you pay on that loan, you're starting to pay less in interest because the bank gets theirs up front. The latter years, you start to pay more on principal, okay? More on that piece of the home that you actually own. But that loan that we're seeing here, the fixed payment variable mortgage loan, that throws that into question. So when are you going to be able to own? So you might say, hey, Tyrone, okay, man, what's the solution? Well, I am a huge advocate for finding a plot of land in someplace that's off the beaten path and paying for that. And I also am an advocate for, if you can, doing that outside the financial system. You know, you can, nothing's stopping you in America. I don't know about any place else, but here in America, if I own a piece of property and you want to buy that property, you and I can make a deal. I can even hold the note. Okay, that's how that you can do that in America. Does it take research? Absolutely. Take a little bit more legwork? Absolutely. Is it worth it? I think it can be when you're talking about sidestepping, you know, the voracious greed of not just the banking industry, but also the government as well. Because remember, another thing that you'll never with paying on your home in many situations is property taxes. Some jurisdictions in America are moving toward saying, hey, okay, you're this age, we won't hit you with the property tax anymore, but that's not ubiquitous yet. For most homeowners, the standard time to pay off a mortgage is 25 years. Now, in the face of crippling interest rates, some existing homeowners are seeing their amortization period go as high as 90 years as their fixed payment variable rate mortgages adjust automatically to rising interest rates. So what's that tell you? Stay away from that kind of loan. Keep just a plain Jane fixed rate mortgage. Don't get exotic with it, because the exotic is designed to have people still buy houses, usually houses they can't otherwise afford. Okay, it's designed to make the bank money, because remember, if the bank has to come in and foreclose, they'll not hesitate to do that and just resell the house. All right, and continue to get on up and make money. So the solution here is one of them is to stay away from that type of mortgage. We've seen 60 years, 70 years, and we did see someone with years, said mortgage broker Ron Butler. He goes on to say the majority of mortgages at some of the major banks are being extended and homeowners are getting concerned. I bet they are. I couldn't imagine being in here and looking at, God, 60 more years of mortgage payments. That's insane. There are two types of variable rate mortgages, and this is in Canada. Again, guys, experts say one is a variable rate fixed payment mortgage, the other an adjustable rate mortgage, a floating payment that rises with changes in the prime rate. Homeowners with variable rate fixed payments are in a riskier position during a high interest rate period, experts say, because they are seeing a greater percentage of their monthly payment go toward interest and not principal, and for a longer period of time. So the other thing that this does is it prevents you from being able to bequeath that property to your heirs. It prevents you from empowering your kids and their kids with some generational wealth, because most mortgages here in the United States, they're not automatically transferable to your kids. All right. So if you pass away and you still owe that 90-year mortgage, they're going to, I guess some of the sale of that, if there's any equity, will go to probate. But then that mortgage, if you want the house, they're going to have to qualify for a mortgage or come to the table with cash. So by the time, optimally, by the time you are ready to leave, shuffle off this mortal coil, you want your kids, or you at least want the ability to be able to grant that property and control that property. You don't control that property if you still got 45 years left on the mortgage. All right. So it's anti-generational wealth as well. And don't think that's by accident. Do you really think that an organization like the World Economic Forum that came out and said, you will own nothing and be happy, do you really think they want your kids owning anything? Do you really think they want you passing on wealth? This is why acquiring assets, in particular hard assets, this is a very important thing to do. Okay. Because again, you're not passing on your 401k. It's not set up to become generational wealth. That works. All right. You're not passing on Social Security. And then under this scenario, you're not passing on your house either. Okay. You're not passing on your house with a 90-year mortgage. Hello there, Jackass Whiskey and Pinto Beans. What a screen name. I love that screen name. Debt free is freeing. Absolutely. That is a high form of liberation. Absolutely. Because you're not in hock to anybody, right? You have control over your financial destiny and ability to take money that would otherwise be going to service debt. You have the ability now to take that money and purchase assets. So you are absolutely right. Let's see. A month ago, this is that guy, the mortgage broker, Butler, talking. A month ago, I came across someone with an 87-year loan. Said, oh, this is another individual, mortgage broker Mary Cieltis. Mispronounce that. She goes on to say, that's a problem. Hell yeah. Even if they like having their mortgage payments stay the same, it's still being adjusted because now they're paying much less principal and are more in debt. Quote. Okay. It's to note, said Miss Cialtis, that major banks aren't handing out 90-year mortgages when people first buy the home. The changing amortization period is only happening on existing variable rate fixed payment mortgages. So that's even more insidious because what that's doing is saying you're thinking, oh, this is going to, and look, the soldiers of finance that are here, I know we're savvy. We would ask questions, but we know 90% of the population will not. So you're going in, not you, but someone's going in and they're saying, oh, we're going to have this 30-year mortgage. Let us have one of those, fixed rate variable, what do they call them? Variable rate fixed payment mortgages. And I know they're being sold with, yeah, your payments not to change. And they harp on that. But they fail to emphasize, or they emphasize a lot less, the fact that that payment's going to stay the same. But depending on what the interest rates do, that payment could be going to the bank and not to you actually owning the home. Okay. So look out for that coming to a mortgage broker near you. Stay away from the existing variable rate fixed payment mortgage because when those interest rates adjust, we're seeing these mortgage brokers in Canada are talking about it. They're saying it's taking it up 60, 70, 90 years. Do you think interest rates are going to come down? You really think that over the long term? Okay, what do you think is going to happen as more countries ditch the dollar? Okay, we're not going to be able to bring that interest rate down as more of those dollars flood back into the United States. All right. Well, these countries decide that what they want to do is buy gold instead of dollars. They're doing that to a fare thee well. Right. So as dollar see competition, thanks to sanctions and out of control debt over here in the U.S., our monetary and fiscal policy is just insane. So do you really think we're going to see a prolonged period of low interest rates ever again? I'd stay away from this mortgage. It's up in Canada now, but it's coming to a mortgage broker near you.